I can't think of anybody more qualified to host this discussion. Nick was the former global head of Deloitte's hospitality practice and is now become independent, but he's chosen to focus on Africa and has so far advised on over $300 million in equity investment in Africa. Most recently, CDC's investment in Onomo, but of course, around 5 years ago, the Marriott's acquisition of Protea. So Nick van Marken, everybody, thank you.
Shall we?
Well, thank you very much, Matt, and good afternoon, ladies and gentlemen. It's a great pleasure to be here, and I'm sure we can accommodate the ministers when they arrive. But in the meantime, let me introduce my two panelists, Ilaria Benucci, who is head of real estate with CDC, and Cedric Guilleminot, who's the CEO of Onomo Hotels. Welcome. Good afternoon, welcome. Thanks for joining us.
Thank you.
Onomo Hotels. Perhaps before we talk about Onomo and your investment, Ilaria, we can just talk a little about CDC, because I don't know how many of the audience will be entirely familiar with it, but perhaps you could just provide a little background on CDC, how you look at Africa, what you invest in. You're obviously head of real estate, so I guess real estate is a key theme.
Yes.
But it's obviously a development finance institution. It'd be interesting, I think, just to provide a little background on what you
Yes,
what
just
you
two
do.
words. CDC is the development financial institution fully owned by the UK government, and we invest in sub-Saharan Africa and South Asia, including India and Pakistan, among other countries. We are long-term investors, and our investments are driven by commercial returns, or our capital has to be returnable. However, there must be also a very strong developmental component. So this is the kind of selection in our investment. Again, we are long-term investors. I think that direct balance sheet could be over $4 billion. And among the 6 to 7 focus sector, construction and real estate is one of them. So I'm leading the efforts in this specific sector. We have started investing directly into real estate about a year and a half ago, and obviously one of the most relevant investments is in Onomo. We like three-star hotel. We'll talk about it later, of course.
Yes.
But we like infrastructure in general, so we invest in logistics. We're looking at affordable housing, as you would say, yes, and we're also looking at urban development. And then obviously hotel, which we believe can act as an enabler for the economy. So it's very important for us.
Yeah, well, we'll touch on that because I was quite interested to hear Tom talking this morning particularly about logistics in Kenya and how a lot of investors were looking at hotels in a similar light. Cedric, Onomo, very helpfully you've provided a little bit of background here, which we'll get into. And I know we've got a few more slides just to illustrate a little about the company, but what brought you into the business, and what are the origins of Onomo? When did you join, and how did Onomo start?
First of all, thank you very much for having me. The story for myself started in 2013, or actually in 2012 when I joined Batipa, who was the founding shareholder of Onomo. And we're looking to expand basically their real estate essentially platform into Africa. And an opportunity presented itself, which was Onomo, eventually. They joined the story as one of the founding shareholders in 2009, which just preceded, I think, the first opening that we had in November of 2010. And since then, it's been a hell of an adventure, for sure, and I think a great opportunity for us. The objective, and interrupt me when you must, but the objective for us has always been to establish, a leading Pan-African platform, a hospitality platform in the three-star market, based on a very simple market call, which I think all of you are well aware of. Basically a market which is dominated by 4-star, 5-star hotels, lack of quality supply, some antiquated concepts. So here we come along and hopefully add our little bit with much smaller numbers than Xinjiang, which we just saw. But yeah, we're trying to play our part. We have 13 hotels in operation currently, and are planning to expand that to about 28 within the next 2 years. So some degree of ambition, certainly.
Yeah, well, we'll definitely talk about that. But I know one of the questions you get asked a lot about, and you've popped up on this slide here, the origin of the name. How did you? I mean, you've done a lot of things that the industry would think would be quite unusual or brave, depending on your perspective. You've firstly said that you start with Batipa saying that they're going to invest in Africa.
Yes.
From France. You create a platform, you own the land, you own the real estate, you
Correct.
create a management company, you create a brand. I mean, a lot of the operators in the room will be going, why didn't you just call us? Because we could have taken a lot of this hassle away from day one and you guys could be sleeping peacefully in Paris, resting and just waiting for the returns to roll in. What was the thinking here? Because it's, in many ways quite a radical move, although we've got a couple of startups coming out of Africa now that are similar.
Well, firstly, I think, it stems from the fact that there was a market opportunity, which I touched upon, right? There's a boulevard, I think, in the mid-scale space, which both, goes towards the trends of an emerging middle class, and of course, increased travel or interregional travel in the region. Batipa in itself had an experience in hospitality or investing in hospitality, and I think with the real estate background has always seen value in ownership and real estate ownership, but also I think in operations. So the new foray may have been the establishment of a brand and of course an operating team around that to make this a successful business model. But the idea has always been from an investment perspective to be present on all the elements of the value chain. That was very much, and still is, I think, the story. And luckily, or fortunately for us, we had, and still have, strong capital backing. We're delighted to have CDC join us on board so that we can continue this adventure. With respect to the Onomo name, so we are an African group. We cater for Africa. We are focused solely on Africa, and we are all based in Africa, doing business in the Africas, I would rather say. Onomo has its origin from Dogon mythology, or the Dogon tribes. So it's cosmogony, which is a very complicated name, but ultimately it's a symbol of peace and harmony, which I think stems well also for the hospitality industry, in particular in Mali, as the times are a bit difficult right now. But I think that's what we try and bring. Hotels are more than just, as was said by some of the predecessors who came here, it's not just a place where you sleep, it's a place, in particular in Africa, which is a destination. And you eat there, you meet your friends, you do your business, people hang around, and you need to cater for that. And so the sense of Onomo is just to bring that sense of community and sense of peacefulness. And also something which hopefully is easy to pronounce, I hope.
Yeah, and pronounceable, according to you, pronounceable in all languages the same way.
Just a bit different.
Yeah.
Onomo in French, Onomo in English, Onomo if you go in different other...
But broadly
pronounceable.
Yeah, broadly pronounceable.
Yes, hopefully.
Ministers, welcome. You've joined us at an excellent point, because this is a story about Africa. It's a story about a hotel company that's been created in Africa, and it's also a story of investment. So there's a lot of very, very positive elements to this, and we were actually just about to, I had in fact just asked Ilaria Benucci, on my left here, who's head of real estate at CDC, to explain why she thought it was a good idea to participate in a round of funding that had raised 106 million in equity, which has been broadly handed to this gentleman, Cedric Guilleminot, who's the CEO of Onomo, which, as we've just heard, is a word of Malian origin. Ilaria was just about to explain why this was a great idea. And we were talking about hotels and how they've become much more of an asset class that people are comfortable with, particularly in Africa, and that we should be seeing more of this investment. Obviously, a few years ago we saw Marriott put a lot of money into Protea, circa $200 million. We've now seen 100 million going into Onomo. So there's obviously a bit of a trend. We've seen this with Hilton. We've seen an announcement from Accor, about $1 billion. So there's no shortage of money being announced for Africa. Ilaria, what was the attraction and the appeal to you and CDC?
Well, I would say that certainly the market was a big attraction from a commercial perspective, because probably perhaps we should be talking also what I see from a developmental point of view. From a commercial point of view, obviously the market's a growing market, and what we believe is an underpenetrated segment, which is the 3-star segment. On top, I mean, Onomo has a vision. The vision is to become a Pan-Africa platform. And in this segment of the market, it simply does not exist. So this is a great attraction to us, because we believe in these synergies, and we like to have this kind of scale. I think that equally important was the reputation and the track record of the sponsor. This is Batipa, of course. They have been, in their history, building businesses. That's what we like to do. We don't invest and go out. We invest and we like to stay in the long run and build business together with our sponsor, if you like. So a large commitment from a financial point of view, but also there for the long run. These guys, again, is not I invest, I buy, and I go out as soon as the opportunity arises. This is about building for the long term, which is very much close to what we want to do ourselves. Obviously, track record and management, because this is, I mean, when you are financial investors, management is the one who's going to be executing on the business plan. So either you have trust in the management, or the whole thing doesn't work from the beginning. So to their credit, we were quite impressed about the work that was done and the pipeline, all credible and solid. I think also we did like, obviously there are questions there, because you were mentioning earlier, Nick, about asset light, asset heavy, operator, owning the real estate. We do like this model. We like the model because I think, especially in this part of the world, it is a way of controlling your pipeline and being able to plan, because you don't have to deal with different developers in each country or geography that you go to. And so I think that's quite relevant, and also alignment of interest between owners and operator. Because sometimes, I mean, in my history of investment, what very bad one was when fighting between operators and owners. So that's equally important, especially when the market is not always linear in its performance. And I also we like, as I mentioned earlier, the Pan-African. I think that the geographic diversification helps to an extent mitigate the macroeconomic political risk. So these are key factors for us. And I think that basically Onomo was kind of there in all these criteria. From a developmental point of view, at CDC, one of the big way of defining our development impact is job creation. And I think being the developer, being the owner, being the operator, we are creating quality jobs here, which is very important for us. It's actually core to our mission. And I think also Onomo is particularly focused on training. So you really create the good opportunity. We also like the fact that we engage with the local communities in terms of supply chain and things like that. And so these are the reason why we actually decided to go ahead with this investment.
And tell me, when you talk about the long term, how does CDC define long term? How many
Well,
years?
realistically, we think in a business like this, less than 7 to 10 years is not really, is not what you should look at.
Yeah.
Besides, probably we will talk about it more later, but we tend to, where opportunity arises, to follow our money. So this is the kind of idea we have in mind.
Which is quite refreshing, because interestingly, this deal was one of the biggest private equity transactions in Africa in 2017, and certainly in terms of the hotel industry was a very significant and landmark transaction. So it's quite refreshing to hear someone talk about a deal that they're looking at over a period of 7 to 10 years, rather than the sort of classic private equity approach, which tends to be much shorter than that. And of course, the job creation piece, we heard earlier that 18 million jobs a year are going to have to be created in Africa, 50,000 a day. And the hotel industry obviously is a very significant employer and skills people. Cedric, what was the appeal to you? I guess you ran a process. You potentially, I don't know, you can tell us, had a choice of investors. I don't know how many were knocking at your door and saying, we'd love to give you 50 million to spend. Was it just Ilaria, or was there anyone else?
Well, it was CIC to start with, right? I mean,
Yeah.
it's two shareholders who contributed, I think, both with a long-term vision and complemented, I think, Batipal's view, who by nature have always been entrepreneurial with an industrial vision and a long-term business plan implementation. Building a business anywhere, I think, is tough, and building a business in Africa is no less tough. And if you want to really create and succeed in creating a platform, you need to take the time. Events happen, and of course one of the answers that we had to that is to make sure that from a portfolio or investment standpoint we had a balanced approach to the different areas of Africa, which also for us caters for the client, which is having critical mass in each of the different regions. But it's
an interesting situation. I mean, the fact of the matter is you were very successful. You ran a process and you raised 100 million. And that's a very positive sign.
I mean, ultimately, if you're embarked in an adventure of that type, it's important for you that you have investors who are aligned. So,
yes.
I mean, of course, we looked at the whole broader avenue of potential investors. I think the important is, I mean, somebody's discussed marriage, I think, earlier on. That's, I think, also what it's about. You need to share the vision. It's complicated to execute on the business plan that we have, which is fairly ambitious. We need to have people who are aligned in terms of their commitment and the time. Time is your biggest enemy, always, and in particular here.
Particularly here. But it's good, I have to say, a lot of people in the audience will probably be unfamiliar with the term alignment of interests between investors and operators, because very often it seems to be something that people want to take a dig at and say that's actually the biggest challenge, is that there isn't an alignment of interests. At the moment, I mean, we're only a few months into the deal, ladies and gentlemen, so we'll come back and check this out next year. But so far we've heard alignment and marriage, so, it must be going well.
I'm still
Cedric.
smiling.
Still smiling, exactly. Italian, so, you can guarantee it. Cedric, your themes and pillars, if you like, of what constitutes the brand Onomo. I've just flipped up this very helpful slide that you put together.
Yeah, I think, I mean, we touched on the aspect which is lifestyle and destination, and I think that's something that we're emphasizing. Of course, we have the first Onomo hotels that came out, and as we're progressing, we've seen great potential in F&B, and a confirmation also since we've migrated from the first hotels that we had, which were airport hotels, towards city center hotels, the fact that the way that people, live their experience in a hotel, in particular in Africa, is really a place, once again, where you eat, meet, greet, sleep. So there's a lot of things we need to cater for our customers. So that's definitely one of the components. A very strong component for us as an African brand is, of course, local content. Local content goes all the way from sourcing. I'll mention that in the case of the hotel that we developed in Bamako, 100% of that hotel is local content. Everything. From the contractors that we utilize.
You didn't import
everything. Well, I mean, of course, if we're talking about HVAC or that type of equipment.
A little bit, yeah.
Okay. But for everything else that we could, 100% was local. That's, I think, in terms of our ethos, our philosophy, it's something which is important, integration of communities, having an impact in the places that we work. I mean, remember, we're there for the long run. We build a hotel, we're there for 10, 20, 30, 40, 50 years. Well, I won't be there anymore, but somebody else will at that point of time. So integration of basically the local know-how, integration of arts and craft in a modern vision. I mean, we've chosen the channel of photography and of visual arts that we represent, with a vision of either outside of Africa photographers having a look at Africa, or African photographers looking at their continent or elsewhere. But that goes all to a place, I think, of exchange. Touching on the rest, I think, two of the elements that were critical for us. One is, of course, technology. I mean, it's the way things are going forward, and I'll simplify that and discuss just...
You should simplify it, because we're hoteliers.
It's a complicated story, and of course you have the limitations in the countries in which you operate, but it's Wi-Fi, and getting that right, I think, is something which is critical. So the hotel here works great. I've tested that. It's one of my pet... I mean, everybody knows that I go insane when Wi-Fi doesn't work, but it's important because you conduct your business, you're in a hotel, you Skype with your family. It's the way you conduct your affairs. Security, which of course in the context of what we've lived in Africa, has been important. It's, I mean, if we go back a little bit in time, we were developing our hotel in Abidjan in the context of civil war. We developed Bamako in the context of the events which you all know, which are still ongoing. We developed Conakry in the context of Ebola, So much so that we still are here and alive and adamant to pursue our development. But, you know, as investors, as people who have their employees that are there, and of course who cater for their guests, it became something which is increasingly, you know, important. I think when we, in the context of Bamako, I think we took our responsibilities very seriously in terms of protection of the asset, the customer, and of course the employees who work within the hotel. And that, you know, led to overinvestment from our part, but which is now part of the culture of what is Onomo. And we're not there to gain the 1% or 2% or 3% of margin. It needs to be done. So I think Eastern African standards in general are, I think, a bit ahead of the curve, and if you look at Africa as a whole, but we were definitely at the forefront in the other portions of Africa, and very much so in Bamako, to the extent that basically we had the German chancellor, when she was coming, staying at a 3-star hotel, which I think is abnormal anywhere else, right? You'd stay at a 4-star or a 5-star hotel.
Because it was perceived as the safest place.
Because of the specific security which we had, both in terms of hard, soft. You know, we have over 30 security guards which are patrolling every single day, and we only have, you know, 114 rooms in Bamako. But we take that seriously, and I think it's important as an investor and a caretaker for both, you know, employees once again and guests.
Can we touch a little on the portfolio, the existing portfolio, if we can pop that up? And your plan, obviously, you mentioned it earlier, 13 hotels in operation, secured pipeline, 9 openings next year. I mean, that's pretty hectic. Where are you focusing your time? Ilaria is going to be interested.
Then you get my version.
Yeah, and then we can ask Ilaria how she thinks you guys are doing against her personal scorecard.
Look, I mean, I think, of course, the question which is behind that is both managing risk, which I think we touched about in terms of creating a balanced portfolio, and that's what we're going towards. I'll come back to that. The second element, which of course is, you know, in a company that has the ambition that we have, growing across a continent with assets that are 10,000, 13,000 kilometers away from our home base, which is now Casablanca, is a challenge. And so managing growth is a complexity. How did we answer that? The first way was the creation of regional offices. So that's the way that basically we see the future. We're an African brand. We're playing in Africa. Africa is not one country. It's a whole array of countries. And there are definitely economic zones. So we've created our first hub in Abidjan, which caters for Francophone Africa, a second one in Cape Town, which caters for Anglophone Africa as of now, with the acquisition of, you know, 6 assets in Morocco, which we've conducted this year, which is another transformational event that helps to create the future pipeline as well. We've created our third hub, even though we have our headquarters over there. And as we scale up on Eastern Africa, where we have, you know, our Kigali opening that happened this year, Kampala is going to be coming next year, et cetera, we'll create our other, you know, regional hub over there. And so that's how we manage sort of risk and how we manage our growth. The simplistic view that we could take is, if you're dividing Africa, is to say we want to be 25, 25, 25, 25. So I'm not quite 100% sure that the pie chart gets to that. There's already 5 components. But so let's say 20 in each. We branched out from West Africa. That's our home roots where we were. You know, forayed into Central Africa, where we've acquired the properties that are still to be developed, and ventured into South Africa, in which we have, you know, an interesting pipeline and 4 assets which are already up and running, and we have Eastern Africa. So the view is a long-term one of where we want to be in having the vision of what the ultimate portfolio that we want is, as opposed to having a view which is driven by ever-changing macro trends, you know. This is flavor of the month, and then it's no longer flavor of the month. Tanzania is great, and then it's no longer great. I don't know where all these countries are going to be in 3 or 5 years, but I know that there's a potential as a whole that I want to cater for those markets, and I want to make sure that we have a presence in those markets.
Yeah. Well, when you look at any of the projections that were thrown up this morning, whether it's 2020, 2025, 2050, whatever the number you care to take in terms of years out, what isn't in doubt is the huge growth that's going to occur and the implications, I guess, for travel. I mean, touching on what Cedric's just said, Ilaria, are there any parts of Africa that are less attractive to you or more attractive? Are you guided by, does CDC have a sort of mandate to say it's only these countries or not in these countries?
Well, we do have, obviously, because of the mandate, developmental mandate, we do have a preference for more challenging geographies.
You have a preference for more challenging
geographies because of
that's also quite refreshing.
Jobs and whatever. However, we also understand and like from the beginning the idea of geographical diversification. So we are fully backing the management. For us, it would be more interesting to have more investment in countries which are less invested, so to speak. So by definition, South Africa is not overly invested, is not the right word, but certainly we
relatively mature.
Exactly. Having said that, I think there is a good balance, and also if you really want to go to more difficult geographies, you have to have your balance right, because otherwise you would be subject to extremely volatile markets, so we understand that one as well. And back to Cedric, of course, we share the vision. Our concern is that it's the usual tension, if you like, between the investors and the actual management. They want to be all over Africa tomorrow. I'm a bit more concerned about let's also consolidate operation, but I think it's part of the relationship. I mean,
it's a healthy relationship. Yeah. It's normal.
So
it's normal that management
it's my task to sort of say breaks and just consolidate. Also, I mean, as we say, there are 4 hubs just opening, and I mean, the key is also the quality of the management team, and to their credit, I must say that they've been attracting extremely high caliber from the industry, which is if you like, a testament to the fact that this company is becoming a reality. People talk about it, people want to join it because they believe in the vision, they believe in the means, they believe in the management and probably the shareholders. So this is all happening now, and so we also have to manage this.
Yeah, I mean, obviously the structure and the shareholders are compelling because they're institutional standard and high quality. Cedric, you've done a couple of deals. Ilaria touched on one in South Africa. Perhaps you can just talk a little about that briefly and whether you'll do more. And then the deal in Morocco, because that was more, well, that was an asset-light deal. It was a company as opposed to real estate. Do you see that as a natural progression, that you'll start looking more at management opportunities as opposed to the type of deals you've been doing to date, which are obviously land acquisition, which often takes a long time, entitlements, planning, construction? We know that these are lengthy processes and you need nerves of steel to get through them.
That's an excellent question. Look, I mean, we know what the foundations were, and the foundations that we built, which were to be an owner-operator, were built out of conviction. At the same time, we don't have unlimited capital. If anybody wants to participate, we can, okay. That's another story also for coffee break. But it's, when we're talking about the pipeline that we have, the first thing that I'd like to point out is we're not discussing what our future remote potential pipeline is. This is what we have that's happening, that's under development now. It'll happen. 3 months here, 3 months there is going to happen. So we are going to have 25 hotels in operation in 2020. And you can re-invite me and we'll see where we are in 2 years. But give or take 3 months. We'll have that. Now, that being said, if you want to develop an asset light, which is the trend, but don't forget that hoteliers started off being asset heavy before they became asset light. And for that, you need a platform. And in all humility, Onomo started as a startup. And we're building that platform, making sure that we have the processes, making sure that we're a blue chip investor, operator, getting the right people on board, establishing a track record, showing realizations, because it's not about talking about what can exist, but showing also people what exists. We've done it. So we can establish basically that track record.
Actually, can we just pop up the next set of slides just so we can show the audience some of what Cedric's already opened, because it's very impressive.
There's 2 elements afterwards, I think, simplistically, and all my colleagues and peers can correct me if I'm wrong, but ultimately, when you're in the hospitality industry, you're selling, if you're going through franchise models or management contract models, you're selling a brand, and you're selling a reservation system. And Onomo needs and needed to establish itself as a brand, and show also what a realization is like, what our platforms look like, because we need to have those local platforms to cater for those future, those future customers, and lead sort of by example as well as by conviction. I think we have a brand which is established. We've gone through our mistakes. We've gone through our progression. We are where we are today, and we can still progress and make things better. And we've developed also through, the approach that we have on a cluster basis, making sure that we have the sales teams on the ground and the infrastructure which is behind that. So the answer in reverse to your question is yes, we will migrate towards that model, but it's also important in your development to get to that place and sell yourself when you're ready, as opposed to going ahead of yourself. And that hopefully addresses part of the management challenge as well. Now that being said, and touching upon the deals which you mentioned, I think a first step for us was, of course, in Morocco. We relocated the whole headquarter teams in 2015 from Dakar, where we were, to Casablanca for a variety of different reasons, and also as we were branching out, and travel at a point of time becomes a bit hectic. So not all of the guest speakers could make it today, but it'll make it a bit simpler if you're traveling out of that as a hub and covering the whole of Africa.
And the signature Lux deal in South Africa that you've done,
which is yet another foray. I mean, I think the point just on Casablanca being, we tried to develop and we failed for probably 2 years, looking at a number of transactions in the gateway cities of Casablanca, Rabat, Tangiers. As a business hotel operator, that's where we wanted to be. But we failed because the price of land was prohibitive and we couldn't make the math work. We followed a company called Cantor, which we've known, I think, probably for 2 years, 18 months, and gradually, discussions progressed until this year we basically acquired the portfolio of 6 hotels, 740 keys, and of course they were faced with the same challenges as us, which was, how do you make the math work? So the way the math worked is basically to go under lease model. And that's a first approach for us in terms of not having full control, letting go a little bit of ownership, but it's the way that you need to adapt. And I think now going forward, we do want to go, full steam, mastering still our development, but I think that we're getting ready. In the context of South Africa, we acquired let's say October of 2016. We acquired a Signature Lux Hotel, which is, for those of you who are familiar with Johannesburg, just in front of the Michelangelo. For those of you who are unfamiliar, it's the CBD-est location which exists, and you can't get better. I joke around and always say we could have sent an intern over there. He could have assessed, the interest of that as a location. So in that context, we acquired both the brand, and we acquired the property over there, and option to continue and to pursue the development which we have in South Africa. Coming back on that, I think we see great potential in South Africa. Of course, you have macroeconomic challenges which exist over there, but in our segment, in those very specific locations that we're looking at, which in a nutshell are Cape Town and Johannesburg nodes, full stop, and in prime A locations, in Durban, that's it. But we have one in Durban, we're happy there. The rest of the development will be in the 2 gateway cities. And that's what we look at. Ultra prime locations at a price point that makes it very attractive, I think, for our customers. That being said, once again, and going back, and I think, we've had discussions also with Ilaria, the other shareholders, etc., we sold a business plan which is one of a balanced portfolio, and we will not branch out of that. It's important for us. So there are other avenues which we may explore in terms of going lighter over there, or branching out, or finding partnerships, because we see that there's an opportunity. But we'll do that in the respect of what we committed vis-à-vis our shareholders.
Can we just touch on something you just mentioned, a price point that is very attractive? I mean, obviously, we've heard a lot about this today in terms of where you've tucked in terms of average rate positioning. Can you just give the audience a little insight into where you saw the gap in terms of price point, which is obviously well below the sort of classic 5-star level in the market, but perhaps above some of the more local hotel accommodation that you might have. Circa what, sort of 80, 90 euro ADR, that sort of range in terms of...
In general or South Africa?
In general.
In general, yeah. We're around 80 euros a night, average rate. Slightly more in Central Africa. I mean, costs are a bit higher. But overall, yeah, that's the correct answer.
And how much of your clientele is local intra-regional traffic versus inbound from outside Africa?
It's predominantly intra-regional travel and intra-African travel. I'd say somewhere around 60 to 70%. Those of you who are in the hospitality industry will also be aware of the fact that the way those stats are built up are based not on nationality, but are based on point of destination of where the travel was booked.
Yep.
So it can be foreign companies working within Africa, but we're still catering, I think, in the masses to African travelers. And I think going back to the Signature Lux example, because I heard there was a lot of discussion about supply and demand, but nobody's discussing the fact that you can also create demand by creating new supply. And one of the things that we've seen, and we were surprised, is we're full on weekends, completely full. And that is 100% new market share that's been created off of South Africans living, let's say, in a 50-kilometer radius, who want to have fun in Santon and who want to go shopping in the mall. But because we're offering that at $7.95 a night, all of a sudden, if you look at your gas bill, you look at the parking, it actually makes more sense to spend a night at our hotel. You're all invited, by the way.
$7.95, I mean, you can't really complain about that. In fact, I should just mention that there's a charity auction, which has been referred to earlier, which is being held tomorrow night. And Cedric has very kindly donated a 2-night stay at an Onomo hotel of your choice. So don't forget to bid. And now you know exactly what the average rate is. You can pitch your bid appropriately.
That's where you were leading me. Oh.
But I would just say it's a charity auction, so if you just apply that normal charitable multiple to the number, because it's for wildlife, and as we've heard and as we know, it is something that we need to protect.
So we'll pitch in the F&B, just to make
it includes F&B?
No, for whoever wins the prize.
Okay.
Which is double the room.
Yeah, there you go. So the rate's $7.95, but it's about 1,900 Rand F&B bill on top. It's just the bar bill. Well, look, folks, we're running out of time, so just perhaps to wrap up, Ilaria, how do you judge performance so far? I mean, I know it's early and you're a long-term investor, but I've heard a lot about long-term investors. They always like to know what's happening in the short term as well. How are you judging the scorecard at the moment in terms of how
I think that what this team has achieved in the space of time we've been looking at the business, that we have invested in the business, is extraordinary. So there is no question, full credit to them. What we like to see is also a bit more of consolidation of operation before we get another 45 hotels. So it's a bit of finding the right balance between, they're driving the car, I'm a passenger. But how do you want to be driven and what pace is something that we should work on together. And find, because for us what is important, I mentioned earlier, if we have to achieve our ambition, which obviously I strongly believe we will, probably there would be additional funds that in due course would need to be raised. And as CDC, long-term investor, we like platform, we like to back serious people that build businesses. I would be very happy to follow on my money and to invest more. And so all of this has to be harmonically executed together with the management.
Well, now it does sound like a marriage, because there's definitely a negotiation going on here about how you're going to access housekeeping funds.
Stay on track, and maybe there'll be more.
So Cedric, you've heard it here first. You know how to roll this forward.
I'm on a leash.
Yeah, you're happy. Well, ladies and gentlemen, I think without doubt, an amazing story, and really such a great story to hear a brand out of Africa and one that's been so successful. So please thank the two panelists for joining us on stage.
Thank you.
Thank you.
Thanks, guys. Thanks, buddy.